Hello there, welcome back to another video on investing in stocks. Sorry this video is late. I should have done it late last year, but here it is, my top picks for the coming 12 months. I'm going to go for quality over quantity this year, and I'm going to do my top 5 picks instead of 10, which I used to do, because that would just be my whole portfolio and that's it. So these 5 are going to be 5 of my personal holdings. You know, if they weren't, they wouldn't be my favorite stocks. And keep in mind, these are my holdings and I'm completely biased. So don't base your investment decision on what I do or say about these stocks, because I own them myself. Now I have to start off with the stock I always talk about. Is my top holding, my favorite stock of all time, Amazon, the e-commerce giant. Down 18% from its all-time high of 2050. This is one of your first opportunities to buy low in many years. The stock has not taken a dip until recently. They're maintaining a high growth rate, sitting at 30% growth rate year over year. AWS is doing well. Grew 46% just this last quarter, so Q3 2018. AWS, which is the world's largest cloud services provider, grew 46% in one quarter, and so they're maintaining the lead in cloud. They're growing really fast. There's not one piece of bad news. Ad sales were up 126% in Q3 2018. Alexa is the number one smart speaker. They have a 73% market share of the US smart speaker market, and studies have shown that these people buying Alexa speakers or Amazon Echo or whatever do actually purchase more via Amazon. I mean, it might be an opposite correlation there, but the people who buy these speakers buy about 6% more of volume on Amazon. And overall, it's just a lot of great news. No real competition on the e-commerce side. You know, Jeff Bezos is going strong, so this is, just a great stock. Moving on to the world's largest defense and aerospace company, Lockheed Martin, taking an even bigger dip, sitting at about 23% from its all-time high of 363 or something. You know, there are rising tensions across the world, especially in the South China Sea and in Eastern Europe. And there's a lot of debates within NATO about expanding defense budgets. There's not really any bad news for Lockheed Martin. They increased their dividend yield from 2.2 to 2.8 now, I believe. Company's doing great. They hit the targets for the F-35 program, and they think they can grow their outputs in terms of amounts of planes, F-35s they sell, by about 40% in 2019, and they want to double it by 2020, I believe. A lot of new customers getting into the F-35 program, and most of the build-up in China and Eastern Europe, I think, is going to be based on missiles, missile defense system, planes, radar equipment, satellites and so on, and that's where Lockheed Martin makes their bread. So I think a great stock, and first of all a really safe stock with a great dividend yield on top. Now moving on to what must be the safest stock on the market, Waste Management, one of my top holdings. I plan to increase this holding. This stock is at its all-time high. As far as I know, it's the only stock I could find that didn't even take a dip during this sell-off. And I think a lot of new potential investors have noticed this company during this recent sell-off due to its, just bulletproof nature. It didn't go down. It pays 2% dividend. It picks up trash, which is one of the most fundamental industries we have. They might take a little hit from China not buying recycled trash anymore, but other than that, it's all good news. Well, at least no bad news for Waste Management. The CEO is so calm and level-headed. Go check him out. This is just the safest stock I can think of, and it has shown it during the recent correction. And after volatility like this, people tend to rethink their portfolio and their risk appetite a little bit, and waste management is a great opportunity to decrease that risk. And moving on to my second largest holding, which is Alibaba, took a massive hit, down 1/4, so 26% math, from its all-time high of 220 maybe, something like that. There's not really any bad news for Alibaba. There's just been a reckless sell-off of the Chinese market, and they got dragged down with it. It's still the fastest growing large company in the world. They're taking over Asia. There's all great news. The last quarter, everything was going after plan. Growth was really strong. Nothing to really report in terms of bad news. Jack Ma left, didn't really cause much of a stir. New CEO seems really, really bright. A bit different from Jack Ma, but I think Alibaba is going to be fine. And this recent sell-off and the slowdown in the global economy is not going to stop the population growth in Asia, nor will it stop the migration from low-class to middle-class consumers, and that's where Alibaba's future is. So nothing is stopping Alibaba, nothing is stopping the growth in Asia. So I think my thesis for Alibaba is exactly the same, but you get it at a 26% discount. And the last one is going to be the air giant Boeing. One of my largest holdings, plan to add even more. I think it's my fourth largest holding, if I'm not mistaken. Not a single piece of bad news. There was some airline crash, which is never good. But they recently increased their dividend from like 1.98, and now it's at 2.25 or something. Great company. They continue to hold their lead in the aerospace industry over Airbus. Those are sort of the two main competitors for commercial airlines, both single aisle and wide bodies. They have the new Dreamliner series, which is very popular, and they still have the 700 series, like the 747 and so on. And Boeing tends to be a bit more of a neutral provider of planes and military equipment and space equipment. So I think in the new global race for aerospace superiority and satellite superiority, Boeing is going to be a stand on more neutral ground than, say, Lockheed Martin or Raytheon, because this is not a pure US military industrial complex company. This is a commercial airline manufacturer, but they do provide military planes. So it might be a cheaper and more neutral option for different countries across the world to buy from Boeing, so F-16 and F-18 Hornets or whatever, instead of buying this super expensive, politically charged F-35 from Lockheed Martin. So Boeing is looking really great. Not really any bad news, even more dividend. Proved to be a quite safe stock during this last sell-off, so it's all green lights for Boeing. So there you got it, my top 5 picks. We got 2 e-commerce companies, 2 aerospace companies, and a waste management company. Maybe not all that diversified. It's 4 US companies, 1 Chinese companies, but Boeing makes a lot of money internationally. Alibaba is mostly in Asia. Waste management is only in the US. Amazon is a bit all over the place, and Lockheed Martin is mostly the US, but quite well diversified. I think a lot of dividend. I've got 3 dividend stocks here that pay over 2%. Then the last 2 pay nothing. So you get some dividends, some growth, some defensive, some aggressive. I think it's a good mix. Let me know what your top picks are, and I'll see you guys in my next video. Hopefully it's going to be soon. I'm just really busy now, and I haven't really had the inspiration to make videos, but hopefully we're all going to do fine during this crash, and I'll keep making videos. I'll see you.